In this video, you're going to learn option strategies that will consistently make you more money in your option trading portfolio. These are proven strategies that consistently produce profits. There are three key strategies that Wall Street doesn't really want you to know about. Number one, it's best to sell options in the short term and buy them in the long term. And we'll show you real examples on how to do that. Number two, how do we use capital most efficiently? Well, hint, options. And number three, when we exit a trade or a position, do we just close it out? No, there's a better way and we can earn even more profits. Before we get started, be sure and hit like and subscribe down below. Also, download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research. You're the one taking the risk. You've got to do the ultimate frisk. In the world of option trading, success isn't about luck. It's about utilizing successful strategies that are consistently profitable over time and proven. Now, Wall Street and institutional investment companies don't really want you to know about these strategies, but believe it or not, they're using them as well. Now, in this video, we're going to talk about exactly what these strategies are and how to utilize them to your advantage so that you can profit in your option trading account. One of the smartest option trading strategies is to buy long-term options and sell short-term options against those. And why is that? Well, time decay. Time decay works in our favor in the short term, and in the long term, it works in our favor as well because it's much slower. So we can utilize LEAPS options, which are long-term equity anticipation securities. Mouthful. But hey, it's a way to control 100 shares of stock with one option contract, and you do it for basically a third or the fourth of the cost of buying those 100 shares outright. So you don't actually have to own the stock, but you can control it. Now, you just like owning the stock though, you can sell short-term options against those leaps and collect either weekly or monthly income every single month as the stock price appreciates, and you make money on the leaps on the way up, while during those pullbacks, you're making money on the call side. So you're making money on both sides. Let's jump into the option trading platform and I'll show you how it's done. All right, guys, let's take a look at Google. Alphabet. The stock is way down right now. They've been in the courts and there's talks about splitting the company up. I don't think that's going to happen, but if it did, I think Google would be worth more than it is today. Their search and advertising is huge. Waymo is killing it right now. So they're a behemoth, but you can see the 50 days below the 200. I usually like to see it break out above, but I'm not worried at all about Google in the long term. If you look at the fundamentals, the income statement is unbelievable. We can look year over year, revenue and net income increasing, balance sheet super strong. If we look at the ratios, we've got a PE. It's very cheap right now at 18. Great profit margins. It's got 58% here. I've seen different, but the profit margin's huge. So we'll go to the trade page. There's a link down below as well for Tasty Trades. Extremely visual and intuitive platform. Love the platform. But we're going to go out again. We want to buy options in the long term, and we're going long on this, and we're going to do a poor man's cover call. So we're going to buy a LEAPS. I'm going to open up the March 2026. It's 325 days to expiration. We'll open that up, and calls are on the left, puts are on the right. We're going to look at the 150 call and buy that for $26.90. The actual mid price is $26.80. We want to have liquid stocks. These are only 10 cents wide. We're giving up, which is $10. One option contract controls 100 shares of stock. So this is 100 shares of stock. It's $2,680 to buy this LEAPS option. Now, if we were to buy 100 shares of Google, it would cost $159 times 100. So it's $15,934. So 15K versus 2K. Extremely efficient use of capital. Now, if we go to the curve mode, this is what I like about the platform and analysis. You can see just like owning the stock, as that price of the stock goes up, we make money. 2680, we make that, we double our money if we get up to the around this $200 range. 204, we're making 2720, which is double. That's 100% more. It's a 2x. So that's why I love leaps. And what you can do is you can hold it. We don't have to hold it for 300 for a year. No, we can sell it at any time. So if we get a big move up right here, we make that money right away if we close out and sell it. So that's what I really like about the leaps. Now, at the same time, we're going to close this up, go back to the curve mode. Now let's open up. I like to go 30 to 45 days to expiration. Excuse me. Let's open up the June. It's actually, I like the regular option chains. So we've got all expirations on here. But if I go regular, they don't have earnings coming up. We can either go 17 days. That's a little too close. So I'm going to go out closer to 45 days. The 52 day. I'm going to open that up. Now, we're at 159 right now. We can sell the 165 and make $6 on the upside, and we can collect $505. That brings the total cost down to $21.75. If we did that every month for, we can pay this off in 4 months, 5 months, if it stays below that 165. It'll eventually move up, and we'll get called away, but at that time we can roll the option out. So we can go either the 165 or we can go the 170 and allow it to make even more room and collect 325. I think I'm going to do that at 325. It brings our cost down to 23.57. It gives me 60. It gives me $10 upside on the leaps, and this is the 30 delta. So that gives this a 70% chance. It's 1 minus the 30 delta of staying, not breaching my 170 short strike. So I think this is the trade I'm going to do. I'll collect $300 a month. I'll do that every month as this stock price moves up, and we'll make money on both sides. So what I'll do is I'll hit review and send and place the trade. Now, one other bonus strategy I didn't even think about until just now is we can DCA, which stands for dollar cost average, into leaps. So when we know a stock is fundamentally strong and we know it's going to go up over time, and there's a pullback in the stock, and hopefully we made money on that call side, but on those days, we can buy more leaps further out in time, a year out in time. And that's the perfect time to buy a leaps. Just like buying stock when it's on sale, we can do that with leaps options as well. And at the same time, you can go ahead and sell that call against it just in case it does take a further pullback. And then we want to DCA even more and buy another lot. Now, how do I exit my leaps trades and collect a little bit more premium? Do I just close out the leaps trade or the poor man's covered call at when it reaches my target price? Yeah, you can do that. However, that's not typically what I'll do. What I'll do is I'll take those leaps options that I want to get rid of. Say I've got 10 or 15. Maybe I want to sell 2 or 3 of those leaps options. Then I'll go ahead or close out. Then what I'll do is I'll take that short call against it and I'll go right at the money. And by selling that call right at the money, you collect more premium. This way, if the stock price moves up, you make money on the leaps and you can just close the whole trade out at that time and be out of it because you've made a profit. Your leaps made more money than the call. However, if there is a pullback, then you've collected much more money, maybe $400 or $500 by going real close, depending on the price of the stock, to the leaps option. And you can go ahead and make money on that call. Now your stock price has pulled back, so you can close out the call, keep that $300, $400, $500, and you've still got the leaps, and you don't have to sell it. You can wait for it to go back up towards your target price. So that's one of the ways that I like to profitably exit my leaps positions and make a little bit more money. All right, guys, check out the link for Tasty Trade down below. Check out the free options workshop in the link below. However, if you hit that like button, I'm happy just as well. Leave a comment. Let me know any questions that you have. I answer every one. Thanks for watching. I'll see you in the next video.